Hey, what's up, folks, and welcome to Kirk Trades. If you want to find out how to find tradable stocks, and if you're a beginner, I highly recommend paper trading and testing these strategies before actually trading real money. Trading stocks is the most riskiest investment to make. You can lose a whatever amount you invest within the shortest amount of time, and you can also make a lot of money on your returns in the shortest amounts of time. And with that said, let's get started. Alright, so here are the top traded stocks within a criteria that I'm looking for, and it's actually very similar to what you'll see on Yahoo Finance as far as the top gainers, top losers, and that's basically what I'm looking for, as well as far as price, volume, and the chart itself. Alright, let's get started. So boot here has already started. Let's say you were to see this post in pre-market. Could you trade this? If you can average out. I consider stocks that have gapped down stocks that you might have to average out. Alright, and if averaging out is a whole nother topic, but it's definitely possible to trade pretty much any stock. Your main focus would want to be volatile stocks. Cool. Alright, so right here, obviously, is where the trend started, and where you would have entered, and to some degree, either right here, based off of your moving average, is where you can take the most risk. If you're right here, you would be working on a 20, which she had a breakout right here. These stocks are a little tricky. If you wanted to do a short trade, it would obviously be the breakdown around right here. Red, and the Heikin Ashi candlesticks, they tell you already. And as soon as she turned this double green, and then on the close of the double green breakout bars, especially this bar right here, which is completely above this bottom bar, the lowest point of this area right here, you would definitely be looking for, if you were looking for a short trade, you would definitely be looking for an out, to exit out of the trade. Alright, let's move on. So as you're going through your list, your top percentage movers, trade has already taken place. Next. Okay, so this would have been something that you would have been looking for. Here's the moving average, crossover breakdown. Down bar, this bar probably opened right here and closed right here. So when it entered, this was doing some type of half of an H pattern. But this move right here is basically what you would be looking for. If you shorted right here, you would have been out right here. But if you place your stop right above this middle bar, actually the loss would be a lot. Yeah, that would have been a big loss. Yeah. Alright, so here's how to find out what your risk reward ratio is. And right there. That's a big loss, huh? That's $500 right there. yeah, so let's say you entered here, and then let's say you focused on this bar right here. Obviously, you don't want your loss to be too big. So basically, pretty much, if you wanted to keep your losses low, you would focus on something like this right here. Okay. So now your loss would be a break-even area right there. So you actually would have been about, if you focused on a close and you were patient, this is a breakout. If you saw something like this, your heart will start, pounding. You'll start thinking of getting out. But if you're in a good trade, if you're in a good position, the movement of the market does not bother you at all. It's very interesting psychological effect, but it's meant to serve you. It's meant to help you. All right. Let's see. So pretty much, the safest bet in trading a stock is a test. With this stock, you can enter on this somewhat of an H pattern. This is not an H pattern, but if this was a little bit higher, you would see an H pattern. You can literally diversify your portfolio by just trading this H pattern and then staying in until some type of test. This right here is the test. Alright, and here's the breakdown of your trend line, and then the market had went up this far. Now, as far as how much you would lose, now you could take a risk. Trading stocks is about taking a risk. Okay. There, yes, that would have been 100. Uh-oh. So that's the bad thing about online charting platforms. Sometimes they have bugs. But I love the this charting platform. It's very good. So pretty much you would have been at about $200, $100 loss right here. There we go. About $210 loss. But let's say you traded on that test. Okay, you focused on a bar that closed above here. And now if you think about it, you're very close to the moving average. In fact, the market did a test of the 20, broke down. Your safest trades will always, if you want a safe trade, wait for the H pattern. Now, here's the thing. This may do an H pattern, pull back, and then just go back down like that. So it's really up to you. The H pattern is just an H pattern hitting support, and from there anything could happen. This stock could have broke out right here. This is a mini bull flag right here. She could have broke out. In fact, she tried to break out right here. Alright, but let's say you stayed in. You focused on a 14.28 exit, or at least an exit on this 50. Say you're right there. She would have been hitting. She would have made a lower high. There it is. Okay. So let's see. Entered on that test. She would have been right there. You would have been getting ready to exit. She did break out, but now we gotta wait for the test. There's another test, by the way. There's corrections all the time. That happen all the time. One thing's for sure. If you get a breakout, you still have an opportunity to stay in because of that test. This is just a breakout of the moving average. Okay, now she's coming back down to test that 50. She broke out of this 50-day moving average, which the majority of traders trade with. But, alright, So let's get right to it. Basically, you could have traded up to here, right there. So let's dig into that. Before you became uncertain and wanted to for sure get out of the trade. So as you're in the trade, as you can see, she stayed below that 50 during the whole time. Even though there was this little bit of a breakout, she respected the 50. Now she may respect the 20. Alright. And you see this right here, and you think, oh, that's okay. The market respects the 50. I'll wait for the 50. Some type of breakout. So you're looking here. So we'll focus on making it as real time as possible to train your brain to recognize the patterns. So you're here for the first time in a while. The stock hit a moving average, but now she's breaking out. This whole time the stock's been below this moving average. Okay, so you can see why you never would want to trade after moving a stock has crossed below, because you just don't know what could happen. Daily showing down. Daily would have showed some type of down move. You would have seen this bar get me a little bit of a green, then to a red, possibly based off of that test. Oh no, she opened on the low. She opened on the low, so that's a great indicator. Hey, the stock might go down. And then obviously you have this right here. Oh, reversal, look at that. Yeah, so you would have seen on the hourly, we have a reversal pattern, which is another great indicator. So you got daily's telling you to go, and the hourly is telling you to go as well. Okay, we got respect, 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 breakout. Right there. So we have a double. We'll wait for the close of the double. And there's your out. It'll be out right there. Now what happens after that, we have no idea. Anything could happen. This is where investors buy, whoever they may be. Especially in this market right here, this is alright, but still tradable. Let's check out the volume. What it look like. Okay, it's not too bad for today. Yeah, today's volume was great. Its average volume, not so great, but today was great. There's a lot of people buying shares, buying and shorting, buying shares. There's a lot of people with shares. So, and all this means is that you can get in and out, or if you wanted to, or if you really liked it, you can take a bigger risk. But that requires just a larger account, because now you have double the possible loss of trading. So there it is right there, $930 plus whatever your broker may be charging. Alright, so hopefully this helped you. This right here is what you would have been looking for. There's your stop area. And if you stuck it out and just waited for this resistance to break out, you would have made a $930. That would have been a possible, was that $180? Close to $100. That's perfect actually. Yeah, that's a beautiful trade. That's a beautiful risk reward, which is just about $100 loss. Cool. Alright, like, sub, comment, and share this video. Let me know what you think about it. If you have any questions, I'm sure you do, and I'll be more than happy to try to answer as many as I can. Enjoy.